So this is a investment dashboard that I created to track my investments through several different platforms. It's quite a basic one. It shows the current portfolio value, how much it's up or down by potentially. So it shows market value and the percentage change as well. It's also got my allocation here, so it's got the percentage of I'm in stocks, cash, crypto, bonds, and premium bonds. And for the next kind of future steps I'll be working on will be investment by region. I also want to create a different either pie chart or donut like this one here to show the sectors that I'm invested in. But here's the key visual. The blue line shows how much I put into it, and the orange shows current market value. So where I've only been tracking my data for the last 2 months, it's obviously quite basic. I have been investing since September, so if I had it from there, it would be a lot clearer of showing the ups and downs. In the long term, it will be quite nice. The blue line should flatten out. I should have it quite going up straight, and then the orange line should hopefully tail up and start compounding, so I get loads of interest on that. So as for my resource allocation, I've got different platforms for several different reasons. The main being to meet my short-term goals, which is buying a house, putting a deposit down. So the plan for that is June 2023, so that's quite soon in terms of investment goes. That's why I've got this lifetime ISA here. So you can put up to £4,000 in a year, and the government gives you 25%. So that's what I've got here, and I've made about £600 on that. At the moment, I've only got about half of that £5,500 invested, and I've got the rest in cash in the lifetime ISA because of the volatility, and I don't want to take the risk of it going down when I need it in the next few years. So what the money that I will be topping that up with before the end of the tax year, I'm currently putting into premium bonds, which is basically a raffle where you can it's risk free, but you can win cash prizes. So as well as the lifetime ISA, I've also got the normal Hargreaves Lansdown ISA with them. So I'm using this as a much longer approach strategy. So at the moment I'm drip feeding £200 a month into 5 different funds, so that's £40 each, just to get a bit of money in there. I know the market's still quite risky at the moment, but the cost averaging approach does seem to be quite effective across the American and UK markets, which is the funds I'm investing in. I'll go through the individual ones later, but that's my strategy with the normal ISA. And once I've maxed out the lifetime ISA, I've got the 4K in my premium bonds ready to put into it. Then I'll start putting more money into my general ISA and the others. So trading 212 is where I invest in individual stocks. This is if I want to take on a bit more of a risk, or I see a particular company at a really good price. So in the recent crash, I got American Express, Disney, and the gym are some of my. I think I've got about 10 or 12 stocks, but I think they're some of the better purchases I got. The gym was really good. That was up about 45% last time I checked. Again, I'll go through all that later. Cash, I've got quite a large amount in a savings account. That was because with a promotional offer with Nationwide, you got £100 for you and a friend who referred each other, and then you also get 5% interest on £2,500 up to £2,500. So hence why I'm holding that in my current account and getting 5% interest. So over the year, that's £125 risk-free, which is brilliant. Crypto, I'm currently down at the moment. I put £200 in, but the Coinbase fees are ridiculous. But there is a way you can go around that, so I'm using Coinbase Pro, I believe, is the technique to do that. And as I mentioned earlier, premium bonds are just a risk-free lottery, essentially. And while I've maxed out my cash in my 5% account, it's not worth getting 0.5 or 0.4% otherwise, hence why I've got those in premium bonds. Okay, so moving on to my Trading 212 account. It is pretty simple. I haven't got anything too exciting or extravagant in there. Tilray and National Grids are free shares. I think my best purchase, as I said earlier, was the gym group. It did go up to about a 45-50% increase from when I bought it. I have doubled down on it, so my average price is 138, currently 10% up. Unfortunately, the last week has not been kind. It did peak at around 190 and is currently trading around 140. I believe this is just from fear coming from the coronavirus, as lockdown and social distancing is being ignored. I think there's a big fear about a second wave of infections, which means the gyms will take even longer to open. and they won't be making money. But I am pretty confident in the gym. It's a very well run business, and it's expanding at a rapid rate everywhere around the country. More gyms are opening up. In my hometown in Reading, I've got 3 gyms. Yeah, I think that's right. 3 local gyms I can go to, all owned by the gym group, and that's all over the country. It's doing very, very well. So if there is a decline in gyms, it will definitely be the independent gyms closing down. They won't be able to survive much longer closed down. But a gym does have quite a bit of cash on hand to put it through the pandemic. And when it opens up, even if there's a recession, people have lower incomes. A cheap commercial gym is where people are going to switch to, because it's cheap and a good quality gym. So people will be looking at this to buy if it does worse, if the situation worsens. Other than that, my portfolio is pretty simple. Some of my favourite shares: Walt Disney, Coca-Cola. I got American Express at a good price as well. That was trading at around a PE ratio of 4 when I bought it. It's now gone up to 14. As you can see on the dotted line there, I bought it at around $83 a share, and it went up to around 113. Now currently at 106, 25% up. I think that's a very good, strong company as well. I'm a bit worried, as people are saying, there's a bit of a credit bubble going on. So I'll look into that a bit deeper. I might cash in, but at the moment I'm very happy with it. Realty Income was another good buy. Since the pandemic, as all the others, it did crash, it dropped off, and it's been trading the last 3 months at an average around $50, which is exactly where I bought it, and it started to take off a bit in the last week, month. So that's up about 17%, and it has paid me a dividend, going to here, of 41 pence, and that was when I owned 2 shares, I believed, and they do pay that monthly. So I bought a few more shares when Trading 212 introduced fractional shares, so I got about 1.595591 additional shares. So my dividend should be higher this month. It's due to come into my Trading 212 account 18th of June, I believe. So other than that, nothing too exciting. Obviously these aren't recommendations or anything. These are shares that I've bought with very little research. I don't recommend you copy of me, but that is my individual share stocks. Okay, so now going over to my Hargreaves Lansdown account. On here, I haven't purchased any stocks and shares because the fees are too high for how I've been purchasing. If I want to put in £200-300 into a share, it charges you £12 to buy and £12 to sell, and you just can't make money off that. It's not sufficient with smaller amounts like I have. So these are the funds I'm holding in my lifetime ISA. As you can see, I'm larger on bonds. The bond market hopefully will survive a bit better throughout this coronavirus pandemic. I know we're kind of at the peak, but there is fears of not only a second wave, but also just a crash in the stock market from people. I suppose it's panic buying. People have been seeing stuff so cheap they've been buying regardless of the real economic events that have happened. So I do have a dividend paying this income account here, Man GLG. I've got a corporate sterling bond, and I've also got a global bond mutual fund. I've got a FTSE 100 index, a Bally Gifford positive change. So the top 10 holdings in this is Tesla, which is obviously a big one. It's quite speculative, but it's doing very well recently, and it's got other big companies such as Alphabet in there. Bally Gifford American tracks the American market and has outperformed the S&P 500 very well recently. So this is Shopify, Amazon, Tesla, Netflix, Wayfair, Alphabet, and again that Illumina and MasterCard company. It shows the sectors and everything there. But in the last 5 years, it's performed very well. So if you put your money in 5 years ago, it'd be up 200%. I'm trying to think what that is. That's 3 times your initial investment in 5 years. I think the S&P 500 went 100. I think it doubled in 5 years, but that triple is a hell of a lot better. So that's why I've done that. Obviously, the past performance doesn't relate to the potential future performance of a fund, but it's a good indicator the manager has. It gives me confidence in the manager. So in my normal stocks and shares, as I said, I drip feed into it monthly. This is the first month the payments come out, so I've got £40 in the same funds I had before that. Man GLG Income. I have got some more riskier ones as well. So I've got a technology index, artificial intelligence, and the FTSE 250. as well as a S&P 500 tracker that index US Fidelity here. Other than that, they're all well diversified. It's mostly American and UK companies. The bottom few here that are in the red don't have much of the tech stock in, which is why I put it in these artificial intelligence and technology index. If you're wondering why this Hargreaves Lansdown is a bit weird, which is also what prompted me to create a dashboard in the first place. So it says my total gain and loss here is only 264, which isn't the case, and that's because once you sell something at a profit and then reinvest it, it counts that as your principal amount rather than including the money you've already made from investments. So that's actually the main reason I set up my Excel spreadsheet, so I can track how much I really earned. So in my normal stocks and shares, I put in 1850 in, so I'm £40 up there, and in my lifetime ISA I put £4,000 in, 25% government top up, 5k, and now I've made £581 on that. So that's my Hargreaves Lansdown. It's a bit more boring, which is why I really like trading 212. You got a bit more control, and it's a bit more risk. So I will end now with my crypto portfolio. It's very small, and at the moment I'm only invested in Bitcoin. So I put £200 in. The fees took most of it away from me. I will be expanding. I will be buying Ethereum and Ripple here. So I will be allocating about 70% of my fund into Bitcoin, and then I'll put the remaining 30%, 15 in Ripple and 15 in Ethereum as well. So I will be updating on that probably in a month's time, see how that goes. But at the moment it's quite a boring portfolio. I've had it about 28th of May, about 2 weeks. Nothing too exciting has happened. Bitcoin itself has been relatively stable, a lot more than it has been in the past. So that's all my portfolios. I hope you enjoyed watching. If you had any questions or recommendations for me, please let me know. And so thanks for watching.